Hi, I'm Krista Tukiainen. I'm the co-founder and chief commercial officer of Climate Aligned, a London-based fintech company working to scale sustainable finance. We're reporting here from COP29 in Baku, Azerbaijan, and I'm joined today by Mahtafar, who is the head of JP Morgan's Development Finance Institution. We're going to be talking a little bit about a new white paper that is being launched here at COP29, where we look into much more detail around the readiness of emerging market corporates to receive SDG-aligned financing based on the impact metrics, targets, and progress that they already disclose. This research applies the impact disclosure guidance developed by the Impact Disclosure Taskforce, which is a coalition of 80 financial institutions and service providers, and it's co-chaired by Aras and another financial institution, Natixis CIB. And I'd like to start by asking you, Aras, to tell us and the viewers a little bit more about the work of the IDT itself.
Yes, thank you, Krista, and great to be here with you. So the IDT was really established to create development finance as an asset class. You know, we hear here at COP a lot, climate finance is an established asset class. It's defined as investments that have climate adaptation or mitigation impact, but development finance wasn't really defined in private markets and in capital markets. And so we want to define it as investments that have development impact and promote the SDGs. So what the impact disclosure guidance does is, first and foremost, it defines what development impact is and how to measure an entity's impact on advancing the Sustainable Development Goals in the countries that they operate in. That was released just 2 weeks ago during the IMF annual meetings. Your paper is looking at how that can be applied in the marketplace for entities, especially those in emerging markets, so that we can get a critical mass of such disclosures in the marketplace and again further guide investors on how to invest in those opportunities.
Great, thank you. And you've read the paper, you know that we've applied this technology-led approach that uses AI and these multi-layered language model systems. We were able to look at close to 300 emerging market companies and their disclosures, and we found that on average these companies are much more ready to disclose these indicators that investors will need to see and to be able to interpret in context to direct investing and capital to these entities. What do you think overall is the significance of the ability to uncover this data, and then obviously the findings themselves as it relates to the next steps of the work of the task force itself?
So ultimately, the task force wants to bring more transparency and accountability on development impact for emerging market entities.
Yeah.
And often these efforts are hampered by the fact that if you build something that is too burdensome for these entities to apply, it often just falls flat and fails. So what your paper has shown is that a lot of this information is already out there, but it just hasn't been collected in a manner that is useful for investors to incorporate in their decision making. So by showing that the readiness is there, that a lot of information can be already pre-populated in these development impact disclosures, it helps with two things. First, it helps the entities to know exactly where they need to complete their information to have a robust impact disclosure. And secondly, it then creates the incentive and accountability mechanism for them to want to do so because they could potentially receive more investment from investors who care about the SDGs. And then the accountability is there because they now need to continue tracking, monitoring, and reporting against those development impacts to continue to be eligible or considered for those investor dollars.
Right. And in an ideal world, where would you like to see this work end up? What are the envisaged next steps for more and more issuers, investors, and financial institutions more broadly adopting the work that the task force has done and published in terms of this guidance, and perhaps similar research or resources that will be developed going forward?
So if we think about development impact as an asset class, as the final kind of destination we want to get to, that could be visualized as having development impact indices, like an SDG index, and then a financial inclusion index, a food security index, a gender index, nature biodiversity. So to have all of these indices, there's kind of 4 building blocks. The first is to have a common language of how development impact should be measured and disclosed. That's been done with the publication of the guidance. The second is to have a critical mass of entities that have measured their disclosure with this guidance. That is being aided and abetted by the AI technologies that you're testing and how we can further do that by building more market infrastructure to promote that. The third is to have actually independent verification and assessment of these impact disclosures. That would be the next step to go through. And then the final step is then to have indices where entities that have development impact disclosure that are verified and assessed to have a certain quality are eligible for inclusion in those indices. When we get to that day, people like you and I can go to our wealth advisor and say, I want to invest my retirement into food security, into nature and biodiversity, and there will be actual investment product to put that money into.
That's excellent. So that's a perfect way to wrap it up, given we are at Finance COP here in Baku. We'll look forward to hearing more of your remarks on the launch event panel discussion tomorrow. And to those of you tuning in from home, we're also going to be live streaming the event. So tune into the event and read the white paper on the Climate Aligned website, www.climatealigned.co. Thank you for tuning in, and thanks so much, Ars, for joining me.
Yeah, thank you, Krista.